What's up, subscribers? Welcome back to the channel. In this video, we'll be talking about some updates for Senseonics stock, trading under the ticker SENS. But first, if you haven't already, be sure to subscribe so that you get notifications about our future videos talking about the stock market and personal finances. And while you're down there, if you haven't already, be sure to check out the links in the description to get your free shares of stock from Webull whenever you open and fund your account, as well as $10 of free Bitcoin from Coinbase whenever you open your account and make your first $100 purchase of cryptocurrency. And don't forget to smash that like button for the YouTube algorithm and to help support my channel. So grab a cup of coffee or your favorite beverage of choice, and let's jump into it. Since the last time that we talked about Senseonics stock here on my channel, it has been absolutely crashing, down to around $2 per share from its highs at around $5.50 a couple months ago. Senseonics stock has been pulling back as part of the broader market volatility that has been hitting small market cap companies with a ton of retail investor interest especially hard. But despite the market volatility, what has been going on with Senseonics from a business fundamentals perspective? In March, Senseonics released their 10K annual report with updates that I believe could help the company to grow significantly over the rest of the year. As we've talked about in my prior videos, Senseonics is a medical technology company focused on developing and selling a long-term implantable continuous glucose monitor called the Eversense monitor for diabetic patients. In their 10K annual report, Senseonics announced that throughout 2020, they were able to complete their PROMISE trial, which was focused on evaluating the safety and efficacy of their 90-day Eversense product for an extended period of time over a 180-day period. During the PROMISE trial, Senseonics was able to reduce calibration down to 1 time per day while also doubling the sensor life up to 180 days, an achievement that I believe is huge for the company as well as for diabetic patients who on average have to stick themselves multiple times per day, usually 2 to 4, in order to monitor their blood sugar. Extending from the results of the PROMISE trial, Senseonics was able to submit a new application to the FDA for their extended Eversense continuous glucose monitor system for 180 days, a new product that would reduce the number of procedures required for patients to utilize this technology, as well as making it more accessible for patients who have limitations socioeconomically. But like we discussed in my last video, because of the pandemic, the application to the FDA was placed on the back burner, as the FDA had to reallocate all of their resources to focus on evaluating and approving therapeutics to treat the pandemic. But with that said, Senseonics provided shareholders with great news in their 10K, announcing that, to their understanding, the FDA expected to begin to review their application no later than April 15th. So at the time that I'm recording this video, fingers crossed, Senseonics' application should already be under review. And with an approval anticipated in the second half of this year, Senseonics expects to begin marketing their 180-day Eversense monitor shortly thereafter. And like we briefly touched on in my prior video about Senseonics, with approval of the 180-day monitor expected within the coming months, Senseonics as a company has already strategically set itself up by forming a new partnership with Ascensia, a partnership that should help Senseonics expedite marketing and utilization of their new monitor. For those of you who may not be familiar with Ascensia Diabetes Care, they're a company that is a global leader when it comes to diabetes management, currently with operations in 31 different countries. Through this partnership, I believe that Ascensia is going to be able to quickly streamline the adoption of the Eversense monitor, as they're a company that is 100% focused on diabetes management. The only information that wasn't readily available whenever I reviewed Senseonics' most recent 10K was the agreement that they have in place with Ascensia about how they plan to split any revenue. So if any of you guys know what they agreed to, please be sure to comment down below and let me know, because I haven't been able to find that information yet. In addition to the news about the 180-day glucose monitor, Senseonics also announced that they have received FDA approval to continue their PROMISE trial to further evaluate the safety and accuracy of the monitor for 365 days, with this news further adding to Senseonics' long-term plans for its pipeline to ultimately develop a 365-day sensor in the future. But in addition to the positive news that Senseonics announced in their 10K, as required by the SEC, they also pointed out multiple different risk factors that investors need to be aware of. With these risks, including the ongoing significant operating losses that Senseonics continues to post each quarter, the fact that their actual results may fall well below expectations, the potential risk of additional costs or delays, as well as the extensive governmental regulations and FDA expenses involved with gaining approval for their products. In addition to this, Senseonics is putting a lot of eggs in one basket with their new partnership with Ascensia. And if that partnership fails and Ascensia is unable to maintain expectations, then this will significantly impact the revenue and profitability of Senseonics. But with all of that being said, in my personal opinion, I continue to be very bullish about Senseonics as a long-term investment. At the time that I'm recording this video, Senseonics is currently trading under $2 per share with a market capitalization of approximately $834 million. And while there certainly is a risk that here in the short term the share price could fall further, in my opinion, the potential growth of Senseonics exceeds the potential risks here in the short term. While here in the short term, investors are paying a premium for shares of Senseonics based on their current revenue and their current valuation, in their recent investor presentation, Senseonics is estimating significant revenue growth year over year. And while there is always the risk that Senseonics will fall short on its revenue expectations, with their impressive pipeline of products, as well as the growing reimbursement from commercial and Medicare coverage of their products, I believe that Senseonics should be able to come close, if not even beat, their revenue expectations. But just remember, my videos are never medical or financial advice. They're merely me researching a company and talking about my opinions about that company based on my research. A small market cap company like Senseonics comes with a ton of inherent risks, so make sure you're doing your own research and only invest in Senseonics if you're willing to accept those risks. What are your thoughts about Senseonics? Are you invested in SENS? Are you thinking about investing in Senseonics? Where do you think the share price is going over both the short term and the long term? Be sure to comment down below and let me know what you think. And while you're down there, if there are any other stocks or topics that you would like me to talk about in a future video, please feel free to comment that down below as well. As a reminder, this video is for entertainment purposes only. I am not a certified financial planner. I'm a resident physician with an interest in personal finances and investing. Please make sure you're doing your own research before you make any financial decisions. And please be sure to smash that like button and click on the subscribe button for the YouTube algorithm and to help support my channel. Thanks everyone. Have a great day.